We're at a big run-up in the Dow Jones Industrials today based on a jobs report that was just right, but one that encourages the Federal Reserve to keep doing its thing, which is why Mitt Romney says he's not too impressed with this whole rally thing. Governor, what do you think of the market's reaction and Ben Bernanke providing all the fuel for this? What do you think?
Well, there's no question but that one of the reasons people are putting money into the stock market is that they see that the Federal Reserve continues to have a monetary policy, money printing, if you will, QE, well, I don't know what the number is, but quantitative easing of such a nature that interest rates are almost zero. And so money's pouring into the stock market, and this will not end well. You can't keep on, if you will, just pouring more and more money, borrowing more and more money as a nation and not having to pay the piper at some point. But the markets like what's going on because it says, look, bonds are going to continue to be cheap. Money's going to flow into the stock market, so prices go up. But, you know, it's kind of disconcerting when you see the people who have stocks making a lot of money, even though you've got lots and lots of people, well, 7.5% of the people in this country that are unemployed. And when you consider the other people who dropped out of the workforce, you got a lot of people hurting in this country. This is very different than what was advertised by the president when he took office. And the stimulus and the monetary policy, we're going to have us under 5% unemployment right now. And we're about double where the president said we'd be right now. So these are tough times. But people who have stocks that like to see interest rates near zero, they're making a lot of money.
So when you say this won't end well, what do you mean?
Well, you can't keep on borrowing massively more than you take in forever. You can't keep on printing money and keeping interest rates near zero forever. At some point, that has to reverse. And at some point, people who are loaning us the money say to themselves, I'm a little concerned about the risk in America, and they want higher interest rates. And interest rates, as they start going up, will mean that we're going to see a lot of money going to pay people around the world we may not be happy with. Right now, we spend about $250 billion a year on interest. But as interest rates return to their more normal level, that number will go to $500 or $750 billion a year. I mean, that's more than we spend on defense. And a lot of that will be going to places like China. We'll be paying for their schools, their research. They'll be investing in their future as we're paying off for the sins of the past. This is not the kind of management anybody in their home or in their enterprise would pursue. Instead, you try and live within your means, invest in the future, but you don't borrow and print money.
You know,